Welcome back, investors, to the After Hours Show brought to you by Ticker Time News. I'm Adam, and today we have got a packed show for you. But remember, this show is being produced for you. Leave a ticker symbol for a company that you are interested in us diving into, and we will do that. Yes, ladies and gentlemen, a show that is built for you. It's a cool concept. We like it. It seems to be working out. This is episode 5, by the way. Uh, First, we'll start off with a real quick market recap. We do have a theme that we want to cover today, and that is the online car industry, such as Carvana, Vroom, Carmax, and Shift Technologies. We want to dive into that a little bit and find out which one has the most growth potential for investors. But the most important thing, leave a ticker symbol. And if you don't know the ticker symbol, that's okay. Leave the company name in the comments, and we will go over that ticker symbol, that company for you. We will look at price action for the day. We'll look at the stock chart and find out if there's any chart patterns, price and resistance, support and resistance, quarterly financials, and any top news for that company. So, real quick, before we dive into any ticker symbols, the Dow snapped a 5-day winning streak today. Let's share our screen so we can all see this together. Give me a quick second to get this going. And here we go. All right, so the Dow was off a little bit today. It was down 0.39%, closing in at 32,825. The S&P 500 was down 0.16%, closing at 3,962. The NASDAQ was up surprisingly, and that helped to carry the rest of the market from sliding any further, but it was up 0.09%, closing in at 13,471. Bitcoin had a wild ride over the past 24 hours. Bitcoin got as low as $53,200 per coin, but it has since rebounded and recovered, and it seems to be holding in this $56,000 price range currently. The CEO of Voyager, who is a crypto marketplace, says that Bitcoin is going to $100,000 in the next 100 days. So we'll have to see if he's right or not. I believe Bitcoin does have the potential to go that far. Remember a statement that uh, I'm forgetting her name, from ARK Invest. Not Kathy Wood herself. Tasha Keeney from ARK Invest. She was on a program once a few weeks ago, and she said that if 1% of the excuse me, I'm getting that phrase backward. The S&P 500. If every company in the S&P 500 transferred 1% of their cash balance to Bitcoin, that would raise Bitcoin's price by $40,000. You have $40,000 plus $60,000, and there you are. You're at 90,000 to 100,000 right there. She also went on to say that if every company in the S&P 500 put 10% of their cash into Bitcoin from their balance sheet, that would send Bitcoin up an amazing $400,000 per coin. So, just for a reference point, Tesla put 8% of their cash on their balance sheet into Bitcoin. And that $1.5 billion that Tesla put into Bitcoin has already rewarded them with over $1 billion in profits from that investment. That seems to be a much smarter move than just holding cash at this point. Okay, so that's Bitcoin. Ethereum has also rebound some. They're up to $1,500 right now. They were in the 1400s earlier today, over the past 24 hours. Okay, for the uh, S&P 500, here's the sectors that did good and did bad. So the more green that you see on your screen, the better a sector did. The more red, the worse the sector did. So, for example, the energy sector, which is down here in this area, it has, I don't see any green whatsoever. No green at all. So the energy sector didn't do very good today, and the industrials didn't do very good today. A lot of red in the industrials for us. But for green, we've got healthcare. Healthcare had a lot of green in it today. A lot of companies were up. Johnson and Johnson, Pfizer, all these healthcare companies were up today. Consumer communication services, Google, Facebook, they were up today as well. You hop into the technology sector, and while some of the big guys did good, like Microsoft and Apple, there was a lot of red in there as well. See, DocuSign down 4.04% today. So not very good for technology if you're not one of the big guys. And let's dive into this a little bit deeper. Let's close this ad out of the way. Now, this is a chart of the S&P 500 broken down by sectors. That's what the different colors are. The lower the color is on the mark here on this screen, the worse that they did today. So, for example, EOG Resources, they were down 4.99%. But then if we go to the flip side, we go to the top of this and we find Campbell Soup Company, they were up 2.7%. So this is a good way to find out, broken down by sector, which ones did good, which ones didn't do so good. And you can kind of see everyone was kind of in this unique area where it wasn't big losses, it wasn't big gains. So we come over here, Tesla down 4.3%, and we go up to Amazon, and they were up 0.33%. Hop over to this, we've got Alphabet, they were up 1.26%. And then on the bottom side, we got Walt Disney down 1.28%. The top over to the red side here, we got Apple, they were up 1.27%. On the bottom side of that, we have got, can we get it? A little dot right here. Yes, DXC Technology Company, they were down 3.8%. So this is just a good little map to see how the overall sectors did. I know everyone's used to looking at the heat map, which is what we looked at first right here, but looking at that bubble chart, it gives you a little better indication of how it's doing. Okay, the 10-year treasury has moved slightly. Um, it is currently sitting at 1.620 right now, which has gone up and down just slightly today. It's staying in that 1.6 range. I know there's been some correlation to the tech stocks during this period of time where the 10-year treasury has been rising. But if we look at this chart right here, and if we go back, oh, we can only go back a month. But this 1.6% where we're at right now, which is all the way to the right side of this chart, if you look, I mean, the 10-year treasury has been up as high as 3.1% and as high as 4% before. So some some see a correlation here with tech stocks and the 10-year treasury and the yield going up, and yield goes down, tech stocks do good. But that correlation breaks down a little bit, especially Friday of last week and earlier this week as well. So it's just something that people are checking out and keeping an eye on right now. But in reality, 1.62 is not that bad when it's been in the 3 to 4% or 3 to 4 points before. So that's a look at that. Okay, let's hop over to ticker symbols that you want to look at. I'm gonna write it down here real quick. Okay, so first one up right here is what we're gonna look at. Give me a quick second here. Okay, so we've got first one in right here. Ticker symbol HOLX. Let's see, what do you think about that company? I think that it will go up to $90. So let's go over to the chart and let's check this company out. So ticker symbol HOLX. Let's take a look at this. So we've got allergenic. Let's just scroll down here real quick and get a quick overview. All right. Develop, manufacture, and supply diagnostic products, medical imaging systems, surgical products dedicated to serve the healthcare industry and especially needs of women. It operates through the following segments. We got, okay. All right. Healthcare sector is definitely a sector that will continue to grow as our population expands. So let's just take a look at this company over the past year, up 128% for performance. The past 6 months, 18.6%, but it's ran into some trouble over the past 3 months, falling 3.1% over the 3 month period and 1 month down 13.2%. Now, stocks fall, that's not necessarily a bad thing. That's when you have your buying opportunities. All right, so over here, 2017 profit margin at 24.7%, and then a profit margin, a loss of 3.4% in 2018, 2019, a loss of 6%, and then 2020 they picked it up again with their profit margin almost hitting 30%, coming in at 29.5%. So 2020, they did really good. Revenue of 3.78 billion, net income of 1.12 billion, and of course the profit margin nearly 30%. So that's looking good for them. And you can see here, I'm looking on the right side of the screen over here. This is where I'm getting this data from. And the platform I'm using is TradingView. They do have a free option to use, but goodness gracious, they give you a ton of information. All right, so we're looking at 2020. We've got Q2 of 2020. This is where they were down slightly. They came in at a loss of 36 cents. And then Q3 2020, they came in at a profit of 53 cents per share. Q4 2020 EPS of $1.88. Q1 2021, and they came in with a profit of 250 earnings per share. All right. Now we have the estimated Q2 2021, excuse me, coming in at $2.62 per share. And that's coming up in 50 days. So it's a little ways off. All right. So let's dive into the chart and find out what's going on. First, we go to the 1 day chart. So we get a bigger picture overview of the company. And we go back 1 year for any trends that have occurred. Of course, there are going to be an uptrend from the lows of March of 2020. Just to see where we can align this, looks like right here. So it came off out of the gate of March lows of 2020 and kind of shot up and overextended itself. And then August, it pulled back down to the trend line here. September, it marched along the trend line, and it's using this trend line right here as support and resistance. But recently, the February 19th fall is what we're looking at here. And this fall came in right after earnings, and earnings beat expectations by 15%. They came in at $2.50 per share, so earnings were good. I think this was profit taking. People holding this stock for over a year and have a really good earnings report right here. I think this was profit taking causing this drop to occur. Let's see if there was any news. This was February 19th. So let's just scroll down here for around that time. Uh, so around that there's no news around that time. We've got February 9th, which is before. We've got insider trends. Let's see if anyone's buying or selling the company. Uh, Senior VP Human Resources sold 6,100 shares on February the 5th for a half million dollars. Uh, let's see. No, let's see. All right, so there's not a lot going on. And if we go to the next story, which is February 22nd, which happened afterwards, this is where they are files draft takeover bid of company shares. Okay, so I don't see news around this date of February 19th that could cause this dip besides maybe just profit taking, which is very common when you're up so much. Let's just hop over here real quick to Google Finance. Sometimes you can find a little more news on the company. Sometimes. So let's just take a peek here. The stock outperforms today. Let's see. 1 day ago from Yahoo Finance sees hammer chart pattern, and we'll look at that in just a second. Time to buy? Question mark. Let's see. Yeah, no, it just looks like they are ready for a boom. The CEO says positioning for post-pandemic healthcare boom ahead. So that looks really bright for the company. And of course, you can see here we already went over the revenue in for the company there. Okay, so nothing there. The company's got a lot of potential now that the pandemic is kinda easing. Up 128% over the past year. We got that. Now, let's dial in some marks here. What can we find on this chart? Yahoo Finance is talking about a hammer pattern. I can totally see that occurring. Let's do this real quick. Let's mark let's mark this off right here. We've got I'm gonna change the color. This red is not for resistance. This is support. All right. So this is a level of support right here for the company. You can see they tested it right here. Let's get this back out. You can see that the support level was tested right here on your screen. And then it most recently was tested on March the 10th right here on your screen. So it's holding up as a support line right now for the company. Okay, let's go look at the hourly chart so we can get a better understanding of what's happening right now with the stock. Okay, let's just fix this a little bit. Okay. All right, this is year to date right here on your screen for what you see. All right, let's line some things up here so we can see that pattern. So we got this right here. I mean, technically, we can go up to here with it. All right, let's put this other line in right here. Okay. So this is that chart pattern that they were discussing earlier, that hammer pattern. You can kind of see this a hammer shape taking effect right here. All right, let's change this back. Okay. Okay, right here. $71.39 is a level of support that the company is at right now. And you can even back test it back there. Go back a little further with it. Okay, right there. So this right here is this blue line. It's at $71.84. That's the middle of the line. You can see access support. One. All right. So we've got support here. We've got support here. Again, support. So whenever the stock falls, it's finding support at this line right here. And we come into a little bit closer. Even right here, when it started to break down, it found support right there. And then it had this little rally. And then it found support, but it broke down. And this is when the whole market was in a downwards trend. So it's not specifically angled or towards this stock in particular. All right, now let's go and look for any current. This coming down like this. What's happening is the stock is being pressured right now with the price action. You see, it's got support down here in the 68 to $69 level. That is really strong support. It also has support at the $71 level up to $72. Really strong support for the company. It's got a lot of room to grow. So if we're looking at near-term resistance, it's going to be right here for the company. This is where I would put near-term resistance. Let's change that to red right quick. All right. So right now we've got really strong support at $68 up to maybe $69. A ton of support for this stock right now. We have some support for the stock at the $72 level to $71 level. And it looks like we have the first resistance point that this stock is going to come into contact is up at the $76 price point right now. So just keeping an eye on this stock. It's really consolidating. So I can change this top line right here and I can bring it down here and right there. And what you see happening is it's even though it's in a downtrend, it's pointing down, the stock is being pressured together. It's like consolidating sideways, but it's consolidating in a downwards trend, which gives you two options. And let's go back at the 1 day chart to get a better feel for where we are with this company. Let's just go back as far as we can here for a moment. Okay. So you can see the March dip was this big drop right here in 2020. So a year ago, it fell down to the bottom. And it looks like that was right here. And it hit a low of $29.09. Since then, the trend line, it looks real steady, nice and steady going up. Even though we have all those ups and downs along the way, it's got a real nice trend line that's acting on, but it's recently found it's coming to some resistance here. Let's see. Earnings $1.88 and $2.50. That was the past two earnings. We go to projected earnings $2.62. So they're expecting to grow, just maybe not as fast as they have been going, but they have a lot ahead of them. Healthcare is a sector that is going to continue to grow. And looking at where we are right now, you can see this downward trend. Let me change over so you can see this. We're looking on the bigger chart, but you see right here this trend. Now, if we look down here at the MACD and the RSI, the MACD is first. It's right here, and you can see this trend line going down, right? And on the relative strength index, we've got this trend line also going down. It's almost at a bottom where it's going to come back up and start performing just a little bit. Because if we look back since March of last year, I mean, it's been on a rocket ship since then, nice and steady trend line. But look at the MACD. When we go from green here to red, it's just a little bit of green, a little bit of red, a little bit of green. It doesn't move much. It just moves a little at a time. And if we go back and look at the chart, we're looking at the RSI, which is the relative strength index in the purple box down here. What we're looking for is anytime the stock has come out of the bottom of the box, like it did right here in March of 2020. We're looking for anytime that has occurred in its history. And if we go back, we've got one right here. That was April of 2019. And then we've got one here, one here. So anytime it falls out of that box, it rises up immediately. Immediately. I mean, you can see this uptrend right here when it falls out of the box. Real good uptrend. So this downtrend right here, it looks like it's reaching its bottom. And also on the MACD right here, if we can look at this, you see there's a red line and a blue line. I'm not sure if it's real clear for you to see or not. But when you're trading and you're looking for when are we getting momentum to swing back up? When the blue line is underneath the orange line here, you're in a sell-off, okay? And if you look right here, the blue line is just so suddenly starting to turn back up, like it's reaching the bottom of the letter U, right? It's just starting to turn up right there, and that's a good sign that the stock has found a bottom and is transitioning back to performing again. And also on the relative strength index, you can see the same thing. The tip of it right here has started to move back in the up direction for ascending. Okay, so I believe this company here, it's in the healthcare industry. It's got a lot of potential for it. So we've got support again right here in the $68, huge support. We've got a little bit of support forming at $72, $71 price point. The resistance we're going to have to fight is at $76 on this stock. All right. Earnings for this stock are still 49 days away, so we have a ways to go for that. The Not really any recent news on this stock. Um, Here's one right here. This is from March the 1st. They acquire a molecular diagnostics firm for 159 million, and that's in the European area. So the company's growing. It wouldn't be buying other companies if it didn't think it had room to grow. Okay, so that's it for ticker symbol HOLX. Let me just hop over here real quick. All right. So I didn't answer the question, will it go to $90? Let's look at that. Will it go to $90? So it's sitting at 71.95 right now. It was up here at $85, and that was where it maxed out at $85, and that was its 52-week high as well. A lot of times when companies do reach an all-time high like this, you'll see a sell-off, and this was a sharp sell-off probably because of profit taking for the past 12 months. So it's gonna reset itself before it starts to climb, and it looks to me like it has found its bottom, and it's going to start moving from here. Where will it go from here? If we look at past patterns, okay, so let's use this right here as a pattern. It fell to a bottom and went up like that. Again, right here as a pattern, fell to a bottom and went up to a top. And then, of course, the current trend line is sticking pretty good for a resistance and support trend line. So if we kind of map this out, it could, what's this angle? Okay. I mean, if it matched the trend line, it would look something like this. So $79 is right there in maybe 3 months, 3 months time, maybe a little shorter than that. That's the potential it has. Again, no crystal ball, can't predict where it's going to go, uh, but we can give guidance off of what it looks like here. Um, let's see here for a second. Okay. All right. So will it hit $90 again? Yes. The question is when? Sometime this year, um, maybe in the next, say, 3 to 6 months. Look at earnings is going to be something big for this company, especially since it just made that acquisition. Earnings. Look at the pattern in earnings. It had $1.88 EPS, earnings per share, and that was ending September 2020. And then we have $2.50 per share. So it jumped up by 80 cents per share. So we go from 250 a share to 262. That's not a big jump like it was from here, $1.88 to earnings here, $2.50. That was a big move, and that's what helped to propel the stock in this very defined upwards trend right here. But now we're going from $2.50 to $2.62. That's not as big of a move, so the stock will most likely take longer to grow into its valuation, which is currently sitting at $18.5 billion. So just keep that in mind. From current earnings or the last earnings to the projected earnings is not that big of growth for them, most likely due to their acquisition. They're spending money right now to make money in the future. So I hope that answered that question. Let's go on to the next question. And we've got, is it SWKS? SWKS. SWKS. I think it will go down to 177 and then go up to 190. So 177 to 190. All right, let's take a look at that one. Hop into it. All right, ticker symbol SWKS. All right, Skyworks Solutions. Just get a quick overview of the company real quick. All right. Design, develop, manufacture, and proprietary semiconductor products. Its product portfolio includes amplifiers, alternators, circulators, detectors, decoders. Okay. All right. Technicals right now say the stock is a buy. 1 year performance, 132%. Year to date performance, 18.4%. Past 6 months performance, 31.3%. 3 month performance, 30%. 1 month performance down 4.4%, and 1 week performance up 5%. We look here from 2017. We've got revenue of 3.6 billion, net income of 1 billion, profit margin 27%. And then we go to revenue of 3.8 billion, net income 918 million, and profit margin 23%, profit margin 25%, revenue of 3.3 billion, net income 853 million. Again, and this is 2020 now. Profit margin 24%, net income 814 million, revenue 3.3 billion. So the company has kind of steadied out from 2018, 2019, and 2020. The company seems to have plateaued a little bit. Maybe it's found its footing. And then if we look whether it's met or exceeded expectations or fell short of that, Q2 2020 we had a miss, Q3 2020 we had a miss, Q4 2020 a miss, but then in Q1 of 2021 we had a good earnings. They brought in $3.05 per share on an estimate of $2.09 per share, so almost a dollar gain there. And now we have an estimated $2.35 earnings per share forecasted for Q2 of 2021. Their products are totally in high demand, with everything switching to a more electrified and more digitalized world that we're living in. Huge, huge, huge potential. Let's take a look at the news real quick. See what we got for them. All right, some insider trading. Let's see what we got. The CEO sold 3,750 shares for 676 million. Let's just see any other. Over the last 90 days, there's only been 6 insider transactions. Uh, okay, so over the past 90 days, 35,300 shares were sold, and that's due to the high right here, almost $200. What was that high? $195.82. So some of the insiders were selling there because of the stock was so high. But before that, during the 90 days before that, the insiders of the company bought 38,200 shares of the company, and that would have been right here during this period where the stock was at a much lower price. So that's a good sign seeing them buy, and they're not selling a whole lot, so that's really good. Q1 results beat estimates. Oh, and look at that. Authorizes $2 billion stock buyback program. Shares gained 12% after hours on that news. Uh, so their Q1 or fiscal Q1 non-GAAP diluted EPS of $3.36, up from $1.68 a year ago. So that's a really big move for their earnings per share, their EPS. It resulted in a beat of $2.09 consensus estimate from analysis. Revenue increased to 1.5 billion from 896 million. That exceeded the projection. The company expects fiscal. This is an important part. This is looking forward. The company expects fiscal Q2 revenue of 1.125 billion to 1.175 billion with non-GAAP EPS of $2.34 at the midpoint of the revenue range. Okay. The street says that they should do 915 million in revenue with non-GAAP EPS of $1.71. So the company has, excuse me, has uh, a bold and a good feeling that the company is going to grow significantly over the next 3 months. So that is really good news for this company. All right, let's dive into the stock chart. All right, we're already on a daily, so let's make sure we get a year's worth in here. And it's always easy to find because there's always this big dip in March. All right, let's put a trend line on here. All right. All right, so here's our trend line. You can see from March low, the stock shot up and it followed this trend line. It was up above it just a little bit. We could probably adjust this into two trend lines, honestly. One for like the past 6 months and then one for the previous 6 months. And then we ran into a little trouble in September. All technology companies had a problem in September. They consolidated, they slowed down their growth, and then shot up again, and then fell back in December. And a lot of technology companies did that in December as well. Some of them succeeded though. And then we have this rise. All right, that's it. Let me just want to look real quick at a historical view of where the stock is. Okay. So the stock's at all-time highs right now, which isn't a bad thing. The technology company. All right, let's look at the 1 hour chart so we get a better understanding of where we are now and find our support and resistance. Let's see, I only want up to year to date. All right, so this is year to date on the chart in front of you. All right, let's see. All right, so here is a support line that definitely catches it when it falls. This is at 169. All right, let's look a little bit closer here. Let's find out where else is there some support. Remember, sometimes old resistance lines become new support lines and vice versa. Okay, right here, definitely right here, we've got support. This is at 175 right here for support. And just to kind of demonstrate this support, you can see right here it acted as support. Right here, it caught the stock from falling. And again here, and then it broke through here, and this was in March. A lot of technology companies did struggle throughout March, so this isn't a bad thing. This is actually a good thing because the company is at all-time highs, and we don't wanna buy when the company's at all-time highs. We wanna buy when there's a pullback. So this is a good thing that there was this March pullback, honestly, I think. It was a great buying opportunity. Okay, so it reached its bottom right here on March the 5th, and that low was $159. And you can see there was a lot of buying support for it at that price because the stock, it shot up, but then it fell right back down. There just wasn't enough to sustain that growth. All right. Okay, so its all-time high was up there, but there's resistance closer down to where the stock is now. So if we're looking for a resistance point where the stock is going to have run into some trouble, it's going to be at the $190 price point right here. That's where it might run into resistance to move forward because you can see that again. You can see it right here where the stock was trying to run up and then it couldn't break above that. When it reached its all-time high, it did, but it had a gap up right here. I'll zoom in on this, but there was a gap up right there. See that gap up? That happened after hours. So that was institutionals buying the stock, which was right after the dividend was paid out. So what that was right there was when people have in their brokerage accounts and they have it set up where their dividends are automatically reinvested in a company, you can see that around the time dividends are paid out. You can find gaps up and even moves up right after a dividend was paid out. And for this company, they had a dividend of 50 cents per share paid out on the 12th of February, and then that day, the 12th of February, we get that gap up after the market closed. So what that was everybody who has dividend reinvestment automatically in their brokerage account. That's what caused this gap up right here. The stock being bought automatically by reinvesting that 50 cent per share dividend. If you didn't know that, that's something cool right there. Okay, so that helped to propel it to its all-time high, the dividend, and then it sold off. And again, a lot of that selling off that we had in March were people taking profits, number one, and number two, it was some say there was a correlation to the 10-year yield and it rising dramatically, but it's still not up to the 3 or 4 points that it's been at before. So not that high. Okay, this stock, it has a lot of good potential for it moving forward. Let's just find, do they have all right, their estimate for next earnings, $2.35 compared with $3.05 their last quarter. So it's going down a little bit. All right, come on. Oh, am I getting hit with slow internet? Here we go. All right, $1.46, $3.05. There was this big boom right here in the fourth quarter for this company. So I'm not sure how quickly it's going to go back and reach its all-time high, $195, but it will go back and test that. Okay. All right. So this is ticker symbol SWKS. We've got good support at $168. We've got good support at $176. And then we have resistance at $190. The stock is definitely in demand. The company's in demand. The company has had a good financial standing. Their market cap right now is 29.8 billion. They are growing. They have missed a few earnings, but they are growing. And in the news, insiders are buying shares. Um, they've also have the stock buyback program. Let's see any other major news here. No. Something else to keep in mind too, the stimulus that's being paid out now, there's a lot of estimates on how much people are going to put in the stock market or into cryptocurrencies when they get that stimulus check. I know not everybody will, but there's some talk that maybe $3 billion will go into the stock market. I think I think a lot of investors who do have the stimulus check and who can put some of it into the stock market is going to. So I think over the next month, we're going to have a lot of rising demand for equities in stocks and cryptocurrencies. And there's going to be a lot of money flowing into those equities. And it's going to be raising stock prices. That's something I firmly believe will happen. So, your question, it's will it get to 190? You think it will? I think it will get to 192, and I think it's gonna have resistance when it gets to $190, but I think it can break that resistance. And if you look here, it took three tries to break that resistance before, and it did it off of the back of that humongous earnings report. So as far as a time frame, again, no crystal balls, but if you look here, earnings report, and then you had this massive spike up right here. You have this massive spike up right here, and it went and it tested this right here, the resistance at $190, and it couldn't break through. And then it sold off sharply, and that was all swing traders because of that great earnings performance. But then it bounced right here off of the $168 support, and it went up and tested that resistance again, couldn't break through. And then when it fell back down and found support right here on the 160, I mean, the $176 price point, and then finally broke through that resistance level of $190. So, yes, it can break that resistance level. I don't think the upcoming earnings could push it above that. I'm not sure right now. I know there's a huge demand for it. I think it's gonna get to the $109 mark, but I'm not sure yet if it's got the momentum to break through it, within the next 30 days, to do it. But it can definitely go up and test it again for sure. Okay, let's look over here. All right, any more, any other questions with that? Any other ticker symbols that you would like to go through? All right, we're gonna hop over while we're waiting for ticker symbols to come in. We're gonna hop over to the. All right, we're gonna hop over to the used cars digital sales uh, companies like Carvana, Vroom, Carmax, and Swift Technologies. So first one is CVNA. This is Carvana. Okay, Carvana's been doing pretty well as a company. It's got a market cap of $22.2 billion. And for this company, you can see here on the right side of your screen these red, gray, and green dots. These represent earnings. So Q1 2020, they missed earnings by a lot. They were down a dollar. They lost a dollar 19 per share. And then Q2 of 2020, they lost 62 cents per share, but that was better than estimates. And then Q3 of 2020, they lost 10 cents per share, which beat expectations. But then we get to the fall winter time, Q4 of 2020, and they lost 87 cents per share. Now they're expected at an estimate for Q1 of 2021 at 68 cents per share. And you can see down here also there this yellow line that is going down right here on this chart. That represents their profit margin, okay? So it started out their profit margin was at a loss of 2.1%. Then their profit margin was a loss of 2.8%. Profit margin loss of 2.9%. Profit margin loss of over 3%. So they need to get their costs in line. But the whole reason I wanted to discuss Carvana, Vroom, CarMax, Shift is because there's a lot of interest in companies like this, and there's a shift happening with the automotive industry. Okay. More and more people are becoming comfortable with buying their cars or selling their cars digitally through an app, through a website. And you can see that in the growth of Carvana. We start at the March lows, and there is a perfect trend line for Carvana going up till today. And if we look closer, we go into the 1 hour chart to look a little closer here. You can see that Carvana is consolidating right now. Since November of last year, Carvana has been moving sideways. And if you are a swing trader, this has been a great swing trading stock. You buy at when it reaches its support, which is right around the $240 to $239 per share mark. And then you sell it at resistance, which is right around the $293 mark. It's been a perfect swing trade setup almost. So you can see that it's got support at 239, 240 per share, and it's got resistance right now at the $293 to $295 mark, and you can see that it came up and it tried to test it right here, March 16th today. It tried to test it, but it did not, and it broke down in the afternoon. Um, so it's currently sitting at $283 per share. So what Carvana needs is some momentum for it to break through. And if we look here, this breakthrough here was all because of earnings. You can see it went up right here, it touched the trend line, and then it broke back down all the way. And that was off of earnings where they lost 87 cents per share, where it was expected that they would lose around 49 cents per share. Okay. So that's a look at Carvana real quick. Let's look at Vroom, which is ticker symbol VRM. And Vroom has something setting up pretty nice. Let's go to the daily chart to get a bigger overview of what's happening. You can see they haven't been public very long. So they went public right here last year in June. It was a very volatile period, a lot of buying, a lot of selling happening, which usually happens right out of the gate of a SPAC, an IPO, or a direct to market play to go public. And then we started settling down into a bit of a pattern here. So we've got support at $32.25 to $33.25. We've got support, and it's hit that support several times. One right there, and then again a few times in that circle there. So it's got good support there. But it also has got support right here, and you can see it here. And this is at 35 to $36. Okay? It's got support there. It's got big resistance when you get up to $44 to $45, and it's got a little bit of resistance right here at the $38 mark. So what it needs is some good news on itself. Let's go look over here, and you can see that Vroom has been all over the place. Q1 of 2020, they met expectations at a loss of 34 cents a share. Q2, they beat expectations with a loss of 53 cents per share. Q3 of 2020, they beat expectations with a loss of 29 cents per share. And then Q4 of 2020, they missed by losing 46 cents per share. So now the estimate is they're going to lose 62 cents per share. That's not looking good for Vroom. The one thing that Vroom has that Carvana doesn't is, at least from 2019 to 2020, they have increased their profit margin. So in 2019, their profit margin was a loss of 23.1%. But in 2020, their profit margin loss was 14.9%. So they've improved on their profit margin. Carvana has not improved on their profit margin. So that's one thing that Vroom has over Carvana right now. Now, Vroom and Carvana, and we're going to look at Shift also. What they need to do is expand their market just like Carmax, okay? We're going to look at Carmax too, but Carmax has locations all over the place. Carvana, Vroom, and Shift, that's what they need in order to grow. So let's look at Shift next. ticker symbol SFT, and it's Shift Technologies. On the daily chart, okay, you can see they went public back here, um, and that was in 2019. So they were flat from 2019 until 2020 for a whole year, and then they shot up to the moon and then came falling right back down. And then they were in this down, descending trading channel, but then they found support. So Shift right now has support at the $8 to the $8.50 range. Good support at those ranges. It has resistance right now at 9.50, $9.50 up to $10. And then it's got really hard resistance when it gets to $10.50 up to $11. So it's going to have a lot of good news and momentum to break $11. Now, it does have an all-time high in the past year of $14.91, and that occurred on September the 8th of last year. Okay, so for Shift, let's go look down here again at their earnings. Q1 of 2020, they met expectations with a profit of 1 cent per share. Then in Q2 of 2020, they met expectations with a loss of 7 cents per share. Then in Q3 of 2020, they beat expectations with a loss of 8 cents per share. Then in Q4 of 2020, they beat expectations with a loss of 7 cents per share. The street is estimating they're going to lose 44 cents per share in Q1 of 2021. I'm not sure that it's going to be that low. Now, they haven't been public very long, Shift, on this list. So, what we have in 2019, nothing really to report. In 2020, their profit margin was a loss of 30%. So they have a ways to go to increase. Right now, the technical signals say that this is a sell at this point, and the stock has been selling off. You can see it reached this high right here. I mean, it peaked at $10.90. It consolidated for a couple days and then sold off, rebound a little bit, and then has been selling off. Let's look at the hourly chart to get a better feel for what this looks like. And you can see this big spike right here that occurred recently. And this was, again, the 8th of February. And then it consolidated for a few days and then it fell hard. And it fell real hard on the 23rd of February. Okay, so right now, Shift has got support $8 to $8.50. It's got a little bit of support forming at the $9 level, like $8.75 to $9. And then it's got resistance at $9.50 to $10 and big resistance at $10.50 to $11. Now, out of these companies, let's just look at Carmax real quick. Carmax does have physical locations. Carmax is ticker symbol is KMX. All right. And let's switch to the daily chart to get a better view of this. We're just going back 1 year. So you can see Carmax, once it reached its bottom in March of 2020, it had a very nice trend line ascending up. And then it got to June, And a lot of companies in June of 2020 also had this problem where they stalled or they lost some. And then Carmax just consolidated from then all the way until this year. January of this year, the stock took off and started rising again. And now it's found this consolidation. It rose again, and it might be consolidating at this upper level. Let's switch to the hourly chart to get a better feel. See this consolidation between the two blue lines. This is 116, $117 up to $123 to $124. But then we have this move right here where it shot up and it looks like it's trying to find support somewhere around the $130 level to the $131 level. It's trying really hard to find support here. You can see this big green candle um, at the end of today to try to keep the stock from falling any further. So this is Carmax. Let's look at their financials real quick. You can see they've last year, um, last 4 quarters, they have beat all but one. And the one they missed on was Q1 of 2020, and they missed on a profit of 3 cents per share. And then they rebounded in Q2 and Q3 and Q4. They're estimated to do $1.26 per share. Now let's look at their profit margin here. We go back 2016 through 2019, 3.9% profit margin in 2016, 2017, 3.8, and then 2018 it jumps to 4.6, and then 2019, 4.3. The stock has definitely been a performer, and all the technical signals point to it being a buy right now. Past year, 134%. Now, this is Carmax. Carmax is a little bit different from the other companies that we're looking at, like Carvana, Vroom, and Shift. So, out of these companies, which one has the biggest potential for upside growth? Carvana, Vroom, Carmax, or Shift? Which one? If you said Shift, you would be correct. Here's a quick article. It says pick Shift over Carvana and Vroom, and they list out why, and there's some good things to consider here. Number one, Shift Technologies, an online used car platform with over 1,000 cars in inventory, recently went public via a SPAC. E-commerce is going to take over 50% of used car sales within a decade, so over the next 10 years. And that's according to industry experts. Shift, with its Lithium Motors partnership, great customer reviews, and strong growth runway, is well positioned to do well in the used auto industry, especially when we're transferring to being more digital about it. And the valuation is far lower than Vroom or Carvana, despite stronger growth. Okay, so let's just go down here real quick. We don't need to go through the history of Shift. The used car industry. The used car industry is twice the size of the new car industry and is the largest vertical in retail, selling around 40 million units per year for a total market size of 840 billion. The market is very fragmented, with the top players, Carmax, only accounting for 2% of the total market, despite market leaders in other retail verticals having a far larger market share. And if we look here, how big can we be? Walmart is at 50. Walmart. Do you believe that? Used car sales. Walmart has 54% market share. Isn't that interesting? Okay, let's dive down here a little bit further. Okay, the Vroom Carvana problem. With two players, Vroom and Carvana, having already completed an IPO, you may be wondering why not buy these two more established players? Why pick Shift, a smaller player? Well, each of these two companies have their own problems. Carvana doesn't have the best management. Its CEO is the son of Ernie Garcia II, someone who, oh boy, someone convicted of bank fraud. Uh, let's not pass the father's sins to the son right away. Let's give them. I didn't catch that point when I read it the first time. In addition, Carvana has a very complex ownership structure that confers substantial power to top management. These factors still make us very wary of Carvana even after its recent raise of 200 plus dollars per share. Vroom, meanwhile, has terrible customer service reviews. Ratings are frequently less than 50% on many sites like Consumer Affairs, Yelp, etc. Many customers are complaining about misleading practices and poor customer service. In addition, Vroom still has a substantial amount of revenue coming from its traditional dealer business. Why shift, you might say? Excuse me for just a quick second. Why pick Shift Technologies over Vroom or Carvana? The points against Carvana and Vroom are points for Shift. For example, while Carvana has shady management, Shift has top auto companies backing it. As the diagram below shows, Lithium Motors is a major backer, owning 17% of the total company. And if we look at this, we can zoom in a little bit better here. Okay, it's a blurry picture. Usually that happens when you take a screenshot like that. Okay, so let's continue. With over 180 dealership locations and a $7 billion market cap, it's a large player in the auto retail space. This is Lithium Motors. The fact that it has chosen to partner with Shift and not Carvana or Vroom gives substantial credibility to Shift. So far, Shift and their ticker symbol for Lithium Motors, LAD, have already announced several partnerships, and we expect more to arrive in the future. Shift is also well loved by consumers, with an NPS far exceeding normal auto retailers and second only to Carvana. Its apps enjoy an incredible 4.8 stars from nearly 3,000 people in total on iOS, which is the highest app rating that this author has seen among auto retailers. And then we have a graphic. Consumers prefer the Shift experience. Okay, let's skip that and go down here. All right, valuation. The valuation is one of the main reasons why we're so impressed and optimistic about Shift. Despite estimates for over 100% growth over the next few years, Shift is valued at a measly 1.3x to 2021 revenues, or around 500 million. The disparity can be seen from the table below. So we have enterprise value in the millions, Carvana, Vroom, and Shift. And then they have Carmax over here for a comparison. Shift is at 490. Vroom is at 6,100. Carvana, 37,000. And again, this is in the millions. Web visits in the thousands. Carvana has, let's see, a bunch of ones here. 11.1 million. Vroom has 1.4 million, and Shift has a half a million. Let's see, growth in 2022. Carvana, 38%. Vroom, 57%. Shift, 987 to 112% growth projected in 2022. And then Carmax comes in last at 16% growth. That reason alone is why Shift is a better investment today over Carvana, Vroom, or Carmax. All right. Conclusion. Overall, Shift is probably the best way at the moment to play the digitalization of the used auto industry. With Vlad backing the company, 300 million in cash to fuel growth, a product widely loved by consumers, and strong growth coming, Shift is poised to achieve market beating performance over the next few years. Let's just look right here at Shift itself. Excuse me for 1 second. Excuse me, sorry for that. Okay, this is Shift's Q4 2020 um, earnings report and their guidance for Q1. So Shift Q4 2020 and 2020 operating results. For the fourth quarter, total revenue grew 168% year over year, reaching a record 73.4 million. In 2020, total revenue grew 18% to 195.7 million. Total units sold during Q4 were 4,666, up 147%. In 2020, total units sold were 13,135, up 18%. For the fourth quarter, gross profit grew to 1.5 million, or 2% of total revenue, up from 700,000 a year ago. Non-GAAP adjusted gross profit grew to 1.7 million, up 2% of total revenue. For 2020, gross profit grew to 12.2 million, or 6% of total revenue, as compared to 1.8 million in the prior year. Now, let's look at what they're projecting for Q1 2020 and for fiscal year 2021. I'm sorry, Q1 2021 and fiscal year of 2021. Revenue in the range of 90 to 95 million, an increase of 200% to 217% year over year. Adjusted GPU in the range of 1.2 to 1.35. Adjusted EBIT of 33 to 35 million loss. Fiscal year 2021 outlook. Revenue greater than 450 million, an increase of 130% year over year. E-commerce unit sales greater than 20,900, an increase of 120% year over year. Ladies and gentlemen, that is why Shift right now is a better buy than Vroom or Carvana. All right. Let's go and look and see, do we have any ticker symbols that you would like us to go over right now? Now is the time to post your ticker symbols for us to dive into. Otherwise, we're going to wrap up this show, ladies and gentlemen. Thank you for watching today's episode. Uh, Again, remember, the whole thesis behind this show is that it is for you. Leave your ticker symbol in the comments. We go over that ticker symbol live on the show. And if you are watching this show after it has already been premiered, you can still leave a ticker symbol in the comments. And on our next episode, we will start the episode with those ticker symbols. Thank you for watching, everybody. Thank you all for the wonderful comments and ticker symbols to go over. I learned a lot doing this with you. I hope you learned a lot too. I'm Adam for Ticker Time News. Thank you for watching the After Hour Show. I will see you tomorrow after the markets have closed.